My name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. Here's your weekly technical analysis of Chicago wheat and corn. I'll start with Chicago wheat. Recently I've spoken a lot about the falling wedge pattern formed over March. 2 weeks ago I gave an initial target X2 in the 635 even area and a fuller target X3 in the 685 area. At the time I said target X2 had already been reached and target X3 seemed a long way away. For clarity's sake, on the chart targets X1 and X2 were earlier targets below for the double top at the start of the year, ones that were not fully reached before we started higher in early April. Well, in the time since, we've seen a few changes. The market has continued this rise and in the process has formed two patterns. Firstly, it has formed a rising wedge pattern over April so far, yesterday breaking clear up through the top of it and making a significant first close over it, whilst also reaching target X3. This was done efficiently, such that the prior overhead congestion from March to June 2013, March to May 2014, both between 675 even and 720, well, let's just say it was like they weren't there at all. Anyway, that was one pattern. The second is a larger and maybe more significant one. Is looking at the whole of the late February to date action as a really big V-bottom. Now, before you say, I know that the placing is unusual, but I say if the shoe fits, wear it, and this shoe fits. Okay, let's now look at likely actions from both the rising wedge and the V-bottom. A provisional target X4 for the break up and out of the rising wedge will be in the 722 area. This is just above the previously mentioned congestion from 2013 and 2014 and close to the October 2013 high at 720 and the March 2014 high at 725. As for the V-bottom, well, that's already been reached, the target for that. It was in line with the earlier high at 688 even. One final point about wedges generally, and a valid one here for the falling wedge and maybe the rising wedge as well. Markets tend to show a weakness in the opposite direction some 2 weeks after the breakout. So in this case from around the 4th of May. That's something to watch out for. One final point in housekeeping after this commentary, I will retire targets X1, X2 and X3 as they are now superfluous. Chicago corn. 4 weeks ago I commented the following, and I quote, looking at the action for 2021 so far, I suspect we may have a larger pattern in operation, possible roof pattern, sometimes known as a half diamond pattern. Roof patterns are rare, but I saw one in LME copper recently as a bullish continuation. Now these can be both bullish and bearish, though the likelihood is about 60% bearish. I cannot give a possible target on the upside as it would require a confirmed break of the February to date downtrend. However, it's possible to give a potential target X to the downside due to the flat base. It would be in the 492 area. End of quote. The break upwards happened 3 weeks ago, just before Easter, and was done with a weekly key reversal up. By making this weekly key reversal up, the market had already filled in the potential target X at 558 for both the upside targets. Now, I had not directly mentioned a number for target X at the time. That's the topside target, obviously. It happened so swiftly after the breakout upwards, however, still there, both for the bullish roof pattern and also for the descending triangle pattern that had formed part of the roof pattern, and both of them were at the same level. Target X will be retired after this commentary. Since reaching the target, prices have continued higher, filling in the previously highlighted gap, 586 to 590, and now trying to fill in the higher gap between 610 and 646 from May to June 2013. Now, whilst there still is this gap overhead partially filled in now, we nevertheless have had some congestions within the area from before the gap occurred, mainly at 627, 633, 635 and 640 even. There is one final point I'd like to discuss. I've drawn a fresh bullish Andrews pitch for the January to March action. I was tempted to base it from the earlier December lows, but I realized that it made seemingly little difference, just a slightly more acute angle. This new pitchfork has merit though. The middle time, currently at 607 even, is the base of yesterday's interesting bullish open and close long white Mariposa. So we're currently in between the middle time below and the upper time above, currently at 665. Thank you for listening. This this weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.